stock market is up 3% today. Bitcoin is up 10% today. Oh no, the stock market is crashing 5%. Oh no, crypto is down 20%. It seems like every other week you hear one of these headlines or you see one of those tweets or news stories. Feast or famine seems to be the name of the game, but let's look at how you can cut through the noise and the clickbait. I'm Corey, and on this channel, I help you decode technology and innovation to grow your wealth on the journey to financial independence. Have you noticed that every other day it seems the markets, whether equity or crypto, is either at an all-time high or it's in a crash? You ever wonder why there's always a manic depressive headline? Hint, because these headlines trigger engagement and response. Let's look at the key behavior that drives all of this market activity. There are fancy terms and concepts and models that can vector on what is creating the volatility in the market, both to the upside and to the downside. But in its simplest form, we're witnessing behavioral psychology, caveman or cavewoman-like behavior. Mostly men are prone to these panics, since the data shows women tend to perform better as investors generally. So you may have heard me say or write on my website that nothing is new under the sun, that we're just new to earth, and so things are new to us. This comes from Ecclesiastes chapter 1, verse 9. The basic idea is that as a species, we're prone to manias, panics, and crashes. Speaking of manias, panics, and crashes, the book by Charles Kindleberger is one of my favorite books, and it covers a number of examples of irrational behavior in markets over the decades, and even going back further than that for centuries. In fact, this book was first published in 1978, and I read it for the first time while in the 5th edition, which was around 2004. If you pick up the book today, you can read the 7th edition, updated for the latest manias, panics, and crashes of 2021. As you can see, people have a central tendency to panic, and they panic often. So why does it always seem like there's a mania, panic, or crash somewhere? First, it is in our nature to want to play games and win. It's the game part of the brain that is the trigger, whether you're playing cards, gambling, or investing in stocks, crypto, or any other markets. These activities lead to a euphoria and extremes such as the Dutch tulip mania in the 1600s, the roaring 1920s, the dot-com bubble, present day things we're all living through. We're all susceptible to getting caught up in this time is different and using the poker analogy of being on a roll and eventually going on tilt. While there has been referred to by some, yet in the end, it's always the same story. While this has often been referred to as the greater fool theory, that will be a limited view because the core issue is not whether we can buy and sell to another person and hope we get out in time. The core issue is that most of us do not realize that we're acting irrationally to begin with, and we're surprised by a market downturn in which leads to panic. I often use the rhetorical question with friends, does the fish know that it's in water, to make this very point. Let's take a look at a few examples of the fear and greed dynamic in real time from this year. Bitcoin drops below 30,000 for the first time since January 2021. Next, we can look at the Bitcoin chart showing this fear from this past July. But quickly, forgetting about the China fear, uncertainty, and doubt, we can see that greed comes right back. Just over 1 month later, the headline is now in full greed mode. Bitcoin is above 30K, and all is well for the moment again. Guess what the news headlines and the market action followed this narrative would be? As you can see, by late July, all was well again in Bitcoin land. Okay, that's great. Crypto is already volatile, but let's look at traditional markets as well. But wait, there's more. There's more fear with the Evergrande real estate developer debt saga coming into international attention, and you have equities going down with many screaming run for the hills. We have the New York Times headlines and every global media outlet sounding the alarm. They may end up being proven right, by the way. Don't worry, you know what comes next. This was followed by collective market amnesia starting on October 1st, with equity and digital assets markets broadly back in a phase of greed, risk on, and all the supposed drama of September has been forgotten. Let's take a look at Bitcoin for the month of October. Bitcoin started the month at 43K, ended the month above 60K. Equity markets broadly also forgot about Evergrande in September. Let's take a look at the S&P index, and you can see the fear was gone again, and the greed came back for the month of October. It's like magic, so you know what that means. If October was a good month for Bitcoin, then guess how November looked. And you guessed it right. The news headlines tell us that Bitcoin plunges 10%. This time, what was the reason? Maybe it was some new health scare, or maybe it was a hedge fund that panicked and sold, or maybe it was fear that the Federal Reserve in the US might think about talking about tapering or actually taper asset purchases. And as we see, Evergrande has come back for round 2 as well. I highlight these month after month examples to emphasize one core point. Using headlines as a basis for planning our financial futures is not a winning strategy. A book like Manias, Panics, and Crashes could be useful because it will give you a more level-headed historical understanding of some of the day-to-day market noise that you constantly are being bombarded with. I will include a link to Manias, Panics, and Crashes, and if you're interested, you can use my link to get the audiobook for free. Let me know what you think about the book. Join me on the path to decoding technology and innovation to grow your wealth on the journey to financial independence. Don't forget to like, share, subscribe, and hit that notification bell. Until next time.